So I did a video in September talking about Affirm and how this stock could be the #1 stock for 2021 in terms of growth. Some of you commented that the model is flawed and when people won't pay, then who will be holding the bag? Which is a valid question, but things are a little different now. So hear me out and then we'll dive into earnings, and I will also share what I hold of Affirm or what position I have in Affirm and how my positions reacted to the earnings. So coming back to the model. All these fintechs are using amazing engines to approve individuals for loans. The difference now versus if this service were to launch in 1990 is that these companies have lots of data, and all that data is coming together and helping them make smart decisions. Now, I'm not saying there won't be any defaults. There is always going to be default, but the ratio is far less, because if you defaulted on your cell phone bill or credit card bill 2 years ago, it's still going to haunt you on how much and at what rate you will get the money. So the shift that I have seen is that more and more folks who have money are still using buy now, pay later because they have better uses of their cash thanks to stock market, and they can make more of their funds than they will pay in the interest. So that's why they're using their cash in the stock market, and then they're using buy now, pay later with those easy monthly installment to pay for the stuff that they need. Now let me share the screen and quickly go over Affirm's results, and also then I will give you the plays I have open. So let's start with how the earnings go. These are some basic metrics on Affirm's earnings. This is what I look for. In just 1 year, their active customers or consumers went up 124% right here. This is amazing. So from 3.8 million, their consumers went up to 8.6 million or 8.7 million. They had 55% revenue growth in the same year. So right here, as you can see, they have revenue, their revenue went up 55%. Anything over 30% revenue growth is a very respectable number for me. Next, another great metric that I look for is, of course, the active merchant for Affirm. They had 3.5x growth in active merchant. I'm happy to get 3 new clients in a year for my company. They had 3.5 times. This is the kind of company you want to be with, or you want to back this up. They are not only the leader in this space, but they are working with all the big names, from Walmart to Amazon to Target and now Apple in Canada. They're already working with the top 4 of the biggest companies in the US. And this is just a start for them in terms of expansion and growth to international markets. Now let's jump to what they are saying for their second quarter of 2022. Well, they operate the financial calendar a little differently. So this year or this quarter was their Q1 of 2022, and the next quarter will be the second quarter of 2022. So as per their guidance, they're saying that they will do a revenue of between 320 to 330 million. I have highlighted over here. Yeah, 320 to 330 million, which is, in my opinion, they're going to blow past that and can easily give us 350 plus million revenue. Given the holiday season spend, which is going to be huge for companies like these, like Walmart, Target, Amazon, holiday season is just huge. And look at their 2022 fiscal year guidance. For the entire year of 2022, they are talking about doing $13 to $13.38 billion. They are rocking on all fronts. Now let me share the positions I hold, and I have a comparison so you can see what happens right with one good earnings. So this is before right here, and this is after, and I'm going to walk you through both before and after. So this is the screenshot I took right before the market opened yesterday, and then I took a screenshot right after the market opened yesterday. So before the market opened, of course, these were the positions I have. I had 1,000 Affirm shares that I bought in September, and I sent an alert on YouTube community because that's the only access I have at that time, that I'm buying 1,000 shares of Affirm, and the price I paid was $89.55. Then I have sold 10 December $150 put, which is expiring this December, I think December 19th or whatever that Friday is. My $150 puts are expiring. I sold 10 of those. Then I bought 5 January 2022 $140 call, and I bought it the day before the earnings, or the day of the earnings actually, when the stock really tanked. That's when I bought these calls. And then I bought 15 January 2023 $240 calls. So this is what I have: 1,000 shares, 10 December 19th or whatever that is, $150 puts, which is I sold. I bought 5 calls for January 2022, $140, and 15 January 2023, $240 calls. Now, this was before. I was losing almost 46% on my December $150 put, about 5% on my January 2022 $140 call, and about 40% on January 15 or January 2023 15 calls for $240. Right, I would say this is my total gain of Affirm before the market open. This year, I have made about $32,000 on Affirm. This is before the market open, okay? Pay attention to this. Then the market opens. Of course, the earnings were amazing. Earnings were really good. And then as soon as the market opened, my 1,000 shares, of course, forget these. We are not really paying attention to the shares. My 10 December $150 put went up to 41% gain. Check this out. I was losing almost 46% over here. As you can see, right here is about 46% loss I had on these. It gave me 41% gain with what the stock did as soon as the market opened. Then the 5 January 2022 $140 call was up 84%. Over here, they were down 5%. And then my 15 January 2023 $240 call went up by merely 1.28%. They were down almost 40% over here. So in just 15 minutes after market open, my $32,000 gain went up to almost $94,000 with all these positions that I have open. Of course, not forgetting the stock right here. Over here, I was gaining about 50% on my 1,000 shares. And over here, I'm gaining about 78% on my 1,000 shares. So majority of them were shares. But of course, as you can see, about 15,300 on those puts that I gained, and about 7,000 on the calls, which I was losing almost $300 before the opening. So just one good day quickly results in these type of gain. And the only reason why I'm showing you this is that Affirm is the most volatile stock. It can actually rank up close in terms of how volatile it is to Tesla. And anytime when something is that volatile or the price moved that much, you get amazing, crazy premiums on options. And that is why I did the calls. I usually don't do calls like this because this is very risky. But I have my reason of picking that strike. I'm going to explain in just 1 second. And as you can see, with just, I would say, 10% movement on the price, and you can see the same calls, which I was losing almost 40%, gave me almost 2% gain. And of course, these calls will be printing as we get into after the holiday season. And that's why I picked January of 2023. And that's why I paid what I paid, $24 for each call. This was a pure earnings play. I knew the earnings is going to be amazing for Affirm. Of course, there is always a risk. Nobody knows what they announce in earnings. They could have a huge one-time expense that's going to drop the stock price like crazy. That's why I only paid like 5 calls and I paid $16 for each call. So as soon as market opened, I actually sold for this Friday, which is when you're watching this video, which is today. I sold 10 because I had 10 shares of Affirm, $180 calls, covered calls. And I basically, when I sold these calls, covered calls, I got about $740, 74 cents on each, the 10 calls. So I got about $740. And at the time of the recording, I was up 32.88% on these. I will let it expire and I probably will keep the entire $740 as the premium collected on these covered calls for $180. Next, I got out of these. Right here, I actually sold them because this was a good jump, and when I saw the graph coming down, of course, can the stock be over $140 by January 2022? Absolutely. But the Terra decay in these calls will kill it. And that's why I didn't want to lose the opportunity of making 84% on these. I mean, this is a great return. So I quickly went up and I sold these 5 calls for $140. And right when the stock was at its prime, I saw some negative candles, some red candles, and I quickly sold this. So this is what I did with Affirm. So right now I'm holding all of this, of course, 1,000 shares plus 10 puts plus 15 January 2023 calls. And then these 10 covered calls that I sold, I got out of this position right here. I would open this position back, not really, because again, January is just around the corner, but I would open the same position for the same strike price or maybe a little higher for April, because the next quarter or quarter 4 for us, quarter 2nd 2022 for them, it's going to be massive. It's going to be huge. And there is a reason for it. So Now, I know that some of you still might not believe in this company and may not agree with this industry, but my opinion is that Affirm still has legs to run for a few years before we start to see some backlash. And for now, I'm absolutely fine taking advantage of this momentum. Look what happened with Disney and also other streaming services. They're struggling now because the user growth is hitting the ceiling, but that's not the case with this industry. This is a very new industry and it has a lot of legs to run. And I think we will see some robust user growth for Affirm and also a healthy international expansion, which is going to be great for the revenues and also numbers. So I plan on holding my shares and playing options based on momentum. This is not Tesla, and I do not play this every week or every day. So for me, this is more of a take action when an opportunity is there and presents itself. Now, the price prediction. So during the earnings call, they announced that they will be rolling out the Amazon integration with this holiday season, and they are the exclusive provider for the next 2 holiday seasons, this one and the next one. This is going to be huge for this company. I feel that we are going to see this stock touch 200 by the end of first quarter of 2022. This is conservative, and I'm not even counting the Target and the Apple partnership. They are going to expand. The consensus price target is 166 for the next 12 months, but I think they don't understand the magnitude of Amazon effect on Affirm. Again, this is my opinion, and I'm not an analyst or a financial advisor. I'm just reading stuff and making sense of it. I'll link my Affirm video over here. Do check it out as I talk about this company in detail and also why I think this is a great stock. If you like the video, then please give it a thumbs up and consider subscribing so you do not miss out on future videos. As always, an absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.